It's about that time of day again here, folks. Back to work, back to work. Hope y'all had a fantastic Thursday, but it's time to get back to work, time to get ready for Friday's, finally Friday trading session. It's Thursday evening. It's December the 10th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with us because my job tonight is to help us find the best trade setups for tomorrow, that finally Friday trading session. I get a great video in store for you guys and gals tonight. Charts are already in the background. As you can see, we got the gold, we got the oil, and of course we got the E-minis on our radar for tomorrow. Speaking of tomorrow, Friday trading session, smaller window of opportunity tomorrow morning on a Friday morning. Got some big news tomorrow, had some big moves on the charts today, got some ranges, got some breakouts, got a bunch of great trades we're tracking for tomorrow's trading session. Before we jump in though and get our hands dirty on these charts tonight, I just want to make sure to remind you we publish this video newsletter every evening, Monday through Thursday, with my best trade ideas for the following day. So make sure you subscribe to our YouTube channel so you don't miss the next one. And don't forget, if you have any questions for me tonight, just drop those questions in the comment section below and I'll get them answered as soon as possible. And as always, I appreciate you guys tuning in every evening on this nightly newsletter. If you enjoyed this video as much as I enjoy making it for you guys, always appreciate you guys hitting that thumbs up button for me here on this YouTube channel. So again, make sure you subscribe so you don't miss the next nightly newsletter. Drop those questions if you got them in the comment section below, and thumbs up if you guys enjoy the content here on this video newsletter. But speaking of the video, let's get this thing going. Let's grab a look at the charts. Time is ticking here. Friday is right around the corner. What do we have on the schedule here? What do we have in front of us here this evening? Let's take a look here. Got the gold, got the crude oil, got the S&P. Gold, of course, went sideways after that three-legged move down yesterday. So gold is a bear market into a trading range. But you'll notice, right, there's a trend line coming up. There's a strong push higher here. So I'd like to get short above the high of this range, but it's going to be a little bit of a tricky short because of that bull momentum and that rising support trend line. I'm looking for a chance to sell it off the high, but I wouldn't be surprised here if we see a breakout and a move higher here. So I'm looking to get short first, but I am more than willing to be convinced to get long here on the gold. I'll talk about my plan for the yellow metal in just a few minutes here tonight on the video. Looking at the crude oil right in the middle. Boy, oil surely caught a bid today. You could definitely tell the oil buyers were happy about the results from today. But I got to be honest, nice strong move up. It looks like the oil may have gone too far. Now, there's a couple of reasons why I say that. We'll talk about more details as we go into the video tonight. But as you can see, we had that big run up and that really big, deep pullback. Now, usually when we get these pops and these drops, usually that means there are three potential scenarios you want to be ready for tomorrow. So in tonight's video, I'm going to make sure we are ready for the three amigos, right, going into Friday's trading session. So make sure you stay tuned if you like trading oil like we do in our trade room. And of course, over on the S&P right now, and of course, the S&P is overall bearish, right? We talked about that big drop coming off the high yesterday, but I'll tell you, it's really difficult to find a good short setup right now on the S&P. I hate to say it, but I'm leaning on the buy side right now on the E-mini. I know, the bears have control right now, but when you see the chart I'm looking at tonight, you're going to go, yeah, it's going to be difficult to structure a short unless we get another big leg down here. So I'd like to be a buyer. I'd like to buy the dip. I'd like to buy the breakout running higher. I would love to catch that move going back up into that range from earlier on this week. So I got a pretty interesting plan there for the S&P, right? You can agree or disagree, but I'll tell you right now, it's going to be difficult to structure those short sides on the email. I'll show you why here tonight on this video. So charts are all ready to go. S&P, oil, and gold. Before we jump in though and get these patterns and these setups for tomorrow, I just want to make sure you guys know the schedule for tomorrow. Tomorrow, of course, is a Friday morning. It's December the 11th. Now, don't forget, Friday mornings are always early in, early out, right? You got to have a good reason to be trading after 11 o'clock Eastern time on a Friday morning. Now, knowing that, we got some big news tomorrow for sure. PPI number always going to be a big market moving event. The producer price index, anytime you see the PPIs, the CPIs, where was the other one this week? We had one earlier, maybe it was last week. Anytime you see PPI, CPI, PMIs, right? Anytime you see the index at the end, you know there's usually going to be some pretty good moves here. So we got a pretty nice setup tomorrow morning at 8:30 Eastern time to kind of kickstart tomorrow's trading session. Again, time will be of the essence tomorrow, especially this time of the year, right? As we go into the last few drops of the year 2020, you know people are going to be looking for any excuse to get out of the office, right, and enjoy the rest of their day. So be careful in the afternoon on a Friday morning. Now remember, we still have some clouds hanging over these markets here as we go into the end of the week. At the beginning of the week this week, we never thought we would be this late and still not have there's a lot of unanswered questions right now. For example, the rollover, right? We thought the rollover for the S&P was going to be today, but as you saw, it wasn't, right? So we're tracking rollover for tomorrow on the E-mini. I'll show you more about that once we get to the charts here in a moment. So we are watching rollover on the S&P to the 321 contract. We'll talk more about that here in a moment. Of course, on top of that, right, we're tracking updates on stimulus. It sounds like right now we are miles apart between the left and the right here on Capitol Hill. It sounds like stimulus is a pipe dream right now, but that could come out of nowhere tomorrow. You never know, right? You never know. The politics are playing hardball out there right now. So we'll see if we get an update on that tomorrow. And of course, the vaccine, right? The vaccine. We didn't really get any firm updates out of the FDA regarding the emergency approval. Today was the big FDA live stream, if you wanted to tune in there earlier today, about the vaccine, right, for, I believe it was the Pfizer, right, getting the emergency approval. So these are the same questions that have been hanging over our heads since Monday this week. So hopefully tomorrow we'll be able to check a couple of these items off the list before we go into that third week of the month, right, next week here. So again, early in, early out tomorrow. We're going to keep an eye on the contract rollover on the E-minis. Obviously the S&P, the NASDAQ, the Dow, and the Russell will be included in that. Will we hear more about stimulus tomorrow? It doesn't seem likely right now, but that is something we're watching closely. And of course, the vaccine updates, right? Will we start? It seems like every time we hear a little peep out of Capitol Hill about vaccines or stimulus, the markets move. So those are definitely going to be some market moving events on our radar tomorrow morning. Now, speaking of tomorrow morning, don't forget every morning, 8 o'clock Eastern time, we'll be in our trade room with all of our advanced members. I would love to have you there, right there with me, looking over my shoulder, asking questions, and doing it right along with me. What I'll do is I'll put a link for you guys to come out and join me every morning in our trade room, 8 o'clock Eastern time. I'll put a link in the description of this YouTube video. Grab that link and don't miss tomorrow morning's trading session, 8 o'clock Eastern time. I'll put all the details in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll drop a big button for you below me tonight on the trading blog. So grab that link and don't miss tomorrow morning's trading session. And again, don't be late tomorrow. Don't be late tomorrow because, again, it's a Friday, right? So don't hit the snooze button, but keep those lunch plans tomorrow. Well, unless you're here in Los Angeles and lunches are closed right now, right? So, but all kidding aside, though, right? Don't be pushing it too late on a Friday afternoon. All right, into our charts here tonight. S&P's ready, crude oil's ready, gold's ready. Let's grab a look here at the E-mini S&P. Now, I joked around a little bit in the introduction on the E-mini by saying, I know we're bearish, right? And we are, right? We're definitely overall bearish. It's difficult to look at this chart and go, you know what? All right, we're a little bit weighted to the downside right now with that big move lower yesterday. But I'm a big believer in the most important information is always today's information. And I'll tell you right now, when I look at today's information, it's very difficult to call this a bear market. We had that really kind of surprise run earlier, right at the opening bell. And you saw, right, how it just whipped back around, went up and kind of went sideways, pretty much right where we had left off in yesterday's trading session. Now, this is basically at this point now a bull market into a trading range. And the amount of this momentum coming off of this low has potential to really springboard this thing back up, right, up towards that weekend gap, right, last Friday's close, and potentially a full pendulum swing right here for tomorrow, maybe even more, right? Who knows, right? But I'll tell you right now, it is very difficult for me looking at this chart right now to justify getting short. I've got this support trend line right below, resistance trend line above. As we go lower, I've really got to be careful selling short right into that low. It's going to be difficult. That's going to be a difficult pill to swallow, convincing people to get short down here right around these lows. It's just not going to be an easy sell to get into. So looking at the chart right now, the key takeaway right now is we are, and again, not long term, but short term here, we are certainly more bullish than bearish right now into a trading range. And ultimately, whenever I see a bull market into a range like, and again, you know, when I say bull market, I mean short-term momentum, right? We're day traders. We're not Warren Buffett long-term investors, right? We're not buying and holding anything. Our average trade position, right, is only going to be a few minutes, so we don't got to worry about the last couple hours of momentum. But long story short, though, this 68 level is that prior spike high from November 9th here into the trading range, right? Let's talk about the best setups for tomorrow. I got my bull market into my trading range, right? I want to find levels of support below the trading range, right? Such as the battle zone down here, such as my support trend line down here. So I'd like to get long, right, on these right down in this area of support. Now, my favorite setups to get long below a bull market in a trading range, you can see it. You can see an example right here. It's called a seller failure pattern. I'd like to go down, get underneath, right, these lows here, get these bears coming down, and look and see if I can catch some of these bears getting short off the moving average and then buy into their stop losses going higher from there. So my kind of ideal setup here to get long would be get down into that trend line, get down into a support, right, into a support level below the range, and then see if I can catch some of these sellers, right, getting fooled on this and buy into those stop losses. The range above us will act as a magnet, and then again, I'd like to leave that runner on right up around that pendulum swing for tomorrow. One more thing you want to consider too would be if we get a strong move down, right, and we really get kind of underneath this trend line, you know what I mean? If it really punches lower, that momentum now will definitely make me pause a little bit, and I'll wait for the bears to try twice. So once, twice, and once I see him try twice, now I'll feel a lot more confident, right, to buy into those stops from there. So just keep that in mind, right? I'm looking for failure patterns down below the low of this range. If it's a modest pullback, I'm looking for a straight up seller failure, right, going higher here. Again, wait for the bears to come in off the moving average. If we get a much deeper pullback, though, again, imagine it going below that trend line here, making a run for it, right? I'm not going to get too aggressive at that point. I'll wait for the bears try once, bears try twice. My favorite tricks, draw the trend line off that low, right? And then, of course, you got two options there. Buy the trend line, right, or buy into those stop losses for that rally running back higher here. So failure patterns as we go lower. And then how would I sell this thing going short? To try to sell it short here, you've really got to get some momentum going lower. We have to hold a pullback here. And I'll tell you, we've got to break this low. We have to get a very strong 1, 2, 3 breakout pattern. And then I can mark the lows. I can mark those highs. And then I can start getting short right off the highs of that new channel. Now, don't forget, there's a big magnet. There's a big range down here. We've been talking about this all week here. But if you missed this earlier this week, right, we get this big range. It's from when is that? Back, yeah, the Thanksgiving Day range there, right at 3630, 3620 area. So we know where these bears are likely trying to go. But again, the hard part's going to be for me to get enough momentum running lower. I just don't want to sell down here. I'm not in the business of selling low at support, right? We have to make sure we break through that area. There's a good chance we make a run lower and these bears go once, twice, and then whoops, right back up right into that trading range. So that's what I'm looking for here as we go lower. But if they can hold it 1, 2, 3 and go, right? hold that low. And again, it's not so much the strength of the move lower, it's more of the jump off the moving average, right? If I can get those bears to go, let's do this, and get short off the moving average there, then I can mark that low, I can mark that high, and I can start getting more aggressive right off of those highs using that big range below me, right, as an objective or a target as we go lower. Now, how about going higher here? Now, again, you want to stay away from the middle, right? Stay away from the middle. How about going higher here? Okay, 2 breakout patterns looking for, and you'll notice it's going to be difficult to sell this market right now because you've got this trend line. This trend line up here is just begging to get tagged by those buyers, right? It'd be a much different story if this high was over here. We could draw that trend line. It'd be a much different story there. But that trend line is just so steep, and you could easily see. I mean, even the most rookie of traders can see this move. So it's going to be difficult to justify getting short here. So 2 breakout patterns. One is going to be, you can already see it kind of forming here right now, a 1, 2, 3 move. I would love to grab a high off that, right, off that new high, right? Find that what I call a 1, 2, 3 breakout. This is the same pattern, by the way, as a breakdown. I've been looking for that 1, 2, 3 break higher into a pullback off the low of this channel. That is one breakout pattern I'd love to see here for tomorrow. Or we may also see that strong spike up, that shallow pullback, that higher high in price, right? And that 2-try breakout pattern we talked about a lot earlier this week, right? Now remember, the key to this one is you got to get one of those, whoa, very strong jumps, then get that shallow pullback, that higher high in price, and everybody will be drooling over getting in underneath that low. Where's my objective on this? My targets are, again, at the pendulum swing, right, at the trend line. And I'll tell you, tomorrow being a Friday, Fridays are one of those days where, like we saw last Friday, don't be afraid to leave a little crumb left of the position open and see how far it goes right tomorrow. That big move down we saw yesterday could easily evaporate if the buyers catch a bid, right, like we saw on oil going for today. So pretty good plan there, I think, to buy below or buy the breakouts, right? Failure patterns below. Remember, failure patterns below, and then breakout patterns going higher. You know, guys, we talk about both failures and breakout patterns, and a whole lot more, by the way, in our free trading courses here at School of Trade. If you haven't done so already, grab that free course. I'll put a little pop-up there for you in the upper right-hand corner. Grab the free course. Inside the free course, you'll learn about my failure patterns, my 1, 2, 3 breakouts, my trap entries. You'll learn all my favorite setups. And of course, you'll learn the entire 3-step strategy that we use every day in our trade room. So grab that link up there, pause the video, get registered for the free trading course. That way, the next time we work together on this video newsletter, you'll know exactly what I mean when I say 1, 2, 3 breakout into hidden channel pullback, right? You'll know exactly what I'm talking about right when I say the 1, 2, 3 breakout into hidden channel pullback. All right, guys? So grab that free course and be ready for the next nightly newsletter. And again, don't forget, right, tomorrow morning, we're going to do all this together, right, in our trade room. So grab that link in the description and come out and join us. All right, we're looking pretty good here. I like the E-mini setting up for tomorrow. Again, I can't find an easy way to sell this unless we can get a nice, strong shot going lower here. How about some oil? How about that oil? They must believe this vaccine is coming, right? They must believe the vaccine is coming because this is obviously a very strong bull move here today. And we knew this was likely at some point this week. We knew we'd probably get some breakthrough news event that would light oil going higher, either being stimulus or the vaccine. We kind of saw that coming a mile away. Well, they definitely ran this thing up the flagpole today, didn't they? Oil is clearly it may not be that clear, but it is a bull market. It was a very significant pullback. But remember, anytime you see this much strength in one direction, there is a big bullseye right on a retest of that high here for tomorrow. Now, I mentioned in the introduction that usually when you see, well, let's put it this way, when a market runs this far like this and then pulls back that deep, it usually means the market went, in quotes, too far, right? Remember, keep in mind, I don't have the right to say the market's gone too far, right? No, nobody does. In fact, that's kind of one of the, that's one of the trading 101 things we learn, back in all the 101 books, right? We don't tell the market when it's gone too far. The market does. But when you see a market V-top like this and crush it going higher and then come crashing back down again, you can definitely tell they overdid it, right? They overdid it. When you see this channel, right, off these highs and off of that low, and you see nobody, right, not a whiff of buyers coming in there, that is the clue. They pushed it a little bit too far. Now, when you see the market go, right, again, quote unquote, too far, it's a very loose term, I understand, right? We now know there are probably going to be 3 possible scenarios here for tomorrow. Now, first of all, you'll notice I've marked up that first leg. I've got that leg there. So that's where that measured move comes from. I'm going to clean that off here real quickly. Just quickly here too. This 46.68 area, that's that prior top, right, that we talked about earlier on in the week. So I can clean that off. And then this area up here is going to be kind of a battle zone. We'll talk more about why that's important here in a moment. Usually what's going to happen in a situation like this is you get these big, strong runs up, you get these really deep pullbacks, and what usually happens is you get 1 try for the bears, 2 try for the bears, and then back up to retest those highs. This is very similar to that nested failure pattern that I talked about on the S&P, right? If the S&P gets crushed going lower, don't just try to buy it. Wait for those bears to try a few times. So a deep pullback, right, into a nested seller failure pattern. Now, that's one possible scenario. The next one is also very potential, is we may see, if I can get a little closer up here, right, on this chart right now, we may see the market run up, fail to retest the high, come back. When we see that market, if the market runs up and fails to retest the high, comes back, 9 times out of 10, this is becoming some sort of trading range, right? Some sort of triangle. If that is the case, now we switch to a range-bound strategy, which means with a triangle, we focus on the edges of the triangle, and anytime there's a range, we focus on failure patterns. So the third, right? You skip number 2, Joe. The second example here is it is a Thursday night, right? It's a Thursday. I apologize about that. So a second example is if we, and the key on this one is it will stall out. Right? It'll stall out as it tries to go back up to retest the high. When you see that happen, you go, okay, we're balancing out for whatever reason, and whenever we have a bull market into a trading range, we look to buy below the range, just as we said on the S&P. All right? That's the second scenario. The third scenario is the reversal, right? Is the reversal. We've gone too far. We pull back nice and deep, right? We get some trap, right? Some trap above the high here. Let me back this out, right? We get some trap above the high, right? And this market says, see ya, we're gone, right? And they take off to the upside. This is one of the easiest scenarios, because now what I can do is mark that low, right? Mark that high, and I can look for my shorts, right? Coming off of that high. Where's my target at that point? My target's going to be back down to retest, well, back down to that range where we spent the majority of the week this week. So those 3 situations, let's get rid of this channel, because the fact that they just didn't do anything to that channel is a big clue here. Let's talk about 1, 2, 3 here real quickly, and some subtle variations here. Now, the one thing you want to keep in mind for option number 1, which is that nested failure, is that you don't want it like this, 1, 2, right? You don't want these what we call micro tries, right, or micro tries. What I always tell my clients is the biggest, right, the bigger the pullback, the wider the 1 and the 2, right? So it's probably not going to be quickly. What you want to wait for is let them go up. And again, think about, trap up here, bears try once, right? They come in, they do it again with a second step, right? Second try now. Now, there's a couple different ways we can do this. My favorite way is to find that trap below that low, right? Those are always really nice. Another way to do it is to draw a trend line, right? And use that trend line as support. That will also work. And the most aggressive way to do it is just to float your order, right? Float your buy order right above that high, right? And buy into those stop losses, right? A lot of times what happens is you'll see this big juicy candle, right? Come off that low, and you can get in right as they're running those stops, right? To go back up to retest the high. A good rule of thumb, though, is that you want to make sure you're at least 50%, right, off the high. You know, if you imagine risk-reward ratio, right? So imagine risk to reward. If you kind of pinpoint that halfway point, right, that aggressive entry I mentioned, that's one of the key components. And sometimes what will happen is the market will give you this, right, real strong run up, and you've got to grab a limit order and bring that limit order in, right, and get in before it goes up. But a good rule of thumb, and we'll talk more about this obviously tomorrow morning in the trade room, is just make sure you think about where's the halfway point. The halfway point is a psychological level, because it allows traders, if you can get in below it, you can risk reward is good. If you get in above it, right, now your risk reward is off balance. And so I try to stay away from those long trades on these particular types of reversals or pullbacks, right, above that halfway point. Hopefully that makes sense. We'll talk more details on that tomorrow morning in the trade room, but that's one of those small details of a nested failure pattern, right? So that's the first scenario I'm looking for here tomorrow. Those are pretty common when you get these big ups and big downs now. Now, another thing I want to watch for is, again, if we end up pumping up and then kind of gravitating back down again. If that happens now, start thinking about a range forming. And if we start getting that range, what's my job? My job is basically get underneath that low, right? Get underneath that low. Get down in the base of this triangle. If you can imagine, right, market pulls back like this and goes into a triangle, right? Oh, sorry. There's my triangle top, right? I'm thinking that low right there and that low right there. That's where I want to be looking for those entries. And remember, because it's a range, what's going to happen is the market will pull back. You'll see bears come in and try to get short on the pullback, and you got them, right? You got them right where you want them, right? Buying the stops, buy the pullback, and running back higher. And then don't forget the pendulum swing, right? The amount below the range, amount above the range becomes a target. All right, we talked about pendulum swings in last night's newsletter. So let me kind of fast forward this here real quickly. If we do end up, again, going up and then back, and you'll see it, right? You'll feel it. The market will be it'll just be uninterested, as I would say, right? It'll feel very lazy. Mark that low, that's your sweet spot. And then as we go lower, right, down into that sweet spot now, moving average comes over, bears try to get short, right, for that move back down again. The problem though is we haven't fully turned momentum yet. We'll talk about that in a moment. And again, this is a failure pattern into a pullback combination, right? Failure into pullback combination. And again, I talk about both of those patterns quite a bit in that free trading course that I mentioned earlier. Again, that link is up there in the upper right-hand corner. Now, remember too, if I can back this out a little bit, if we do run back up here now, draw a line right in the middle, right where these two trend lines come together. That creates the midline. Mark up the distance below the midline, distance above the midline, and that becomes a target. All right, we saw an example of this earlier on this week on the S&P, right? We had that big triangle from last week, I think is what it was, right? So that will be a good objective as we go higher. Okay, those will be tricky. That's gonna be that'll be a situation where you have to wait patiently for that range to develop, right, and then get in underneath that trading range. All right, how does that make sense, guys? Don't forget, any questions, drop those questions for me in the comment section. I can definitely answer those questions right later on. And then, of course, the last possible scenario here would be, or not last possible, but the third scenario I would expect here would be, let's say we end up trapping above this high, because that could happen, right? As we go pulling back here, the bears come in, maybe something happens and the vaccine doesn't look as good. I mean, who knows, right? We get this big run lower here. At that point now, we have what we call a 1, 2, 3 reversal pattern. I'm going to mark up now. I don't want to chase the move lower, right? I'm going to mark up that low. I'm going to mark up that high, right? And we'll look for that short off of that high. Now, that short setup off the high, it will usually be one of those failure into pullback combination setups, right? We'll end up usually getting just above the moving average, right? So buyer failure pattern, seller pullback pattern, right? We go over these again in the free trading course. That way you'll know what I mean, right? When I say failure into pullback combination there. Where do we think, though, these bears are trying to get short? Where they're trying to go to? They're trying to go back to that range, right? 45, 50 or so, down around that low. Maybe even as low as that 45, right, from earlier on in the week. So that would be something to look for here tomorrow. If the market doesn't even go higher and just runs lower here, you would definitely want to look for a 2-try trap. If we can get a little shallow pullback there, lower low in price, 2-try traps are always on my radar whenever we see a real strong move down. And as always, as I always remind you guys, I'm always trying to find those draw trend lines off support, find that trend line as resistance, right? Copy and paste that hidden channel on and get short at that trap, right? So don't be afraid to keep using those channels with those 2-try traps as we go, right? As we go lower. So that's our third pot. That's a third potential scenario there. You know, I would also say too, there is a very this is a good possibility, like I said earlier, that we do retest these highs. So imagine now, right? We jump up, we pull back. We break through these highs, 1, 2, 3 breakouts. See ya. We're going to what? Maybe going to 50 now. Remember we talked about there being such wide open space up here. There's nothing up here until 50.73. So you have to think $50 a barrel is a big psychological number. We were hanging around 50 before the lockdown began back in what feels like 20 years ago now, right? Back in what? March, early March, right? Late February. So again, we do expect this thing to make a run higher here. One way to get into it as it's going higher would be a 2-try trap. Just stay away from the market though, right? As it goes into that high. Again, that's why I put this rectangle up there. I don't want to get too aggressive, but if the market does make a run up and I can get that strong shot, right? That shallow pullback, that higher, right? That higher high, that trap low, I would not be opposed to that. Also, too, that strong move up, right? That pullback and that jump, that will obviously be a little bit easier to stomach because you won't be buying into that high. You'll wait for that breakout. 1, 2, 3 breakout into hidden channel pullback. And again, that will oftentimes be that pullback. It won't just be a pullback. It'll be a seller failure into pullback combination, right? Seller failure into pullback combination as we go higher. And then, I mean, dare I say, if it does do that, I mean, shoot, the only thing you really have to work with is this leg right there. And I think that probably puts you close to that is 49. I was going to say, probably puts you close to 49. So 49 seems reasonable as well, right? The problem is there's not much else up here. So, 49 and 50 big round numbers seem very, very reasonable. 50 does seem like a stretch for tomorrow, but it's only $3 away. Oil can easily go $3 in a day if it gets a good reason to do so. And then, of course, don't forget, too, we may just simply go up, double top off that high, right, and come back down, and that will be the same range scenario, right? If they go up, they double top. Just be aware though, if this does double top and come down, it will be a very strong momentum move as we go lower. So as we go lower here, it will feel very bearish. It'll probably be best to look for those nesteds, those 1, those 2s, right? Get that trend line and buy up from there. So as you can see, there are going to be some variations we may see tomorrow on this. Be careful if it double tops and comes back down because that momentum will swing. Anytime I want to buy a deep pullback like that with a nested or anytime I want to buy a deep pullback, I like to let the bears try a few times, right? That way I can buy into those stop losses for that snapback going higher here. So hopefully that kind of clues you in for tomorrow. Some of the setups we're looking for tomorrow in our trade room. And again, like I said earlier, I'll put a link for you guys in the description of this YouTube video, grab that link and come out and join me tomorrow morning and every morning at the opening bell. Don't forget to grab that free trading course too, that we get more info, right, for tomorrow night's newsletter or the next edition of our nightly newsletter. And then, of course, last but not least here on the gold, we'll wrap up this week. And again, tonight is my last video newsletter of the year this year, as I was talking about right earlier on this week here. I will not be publishing the newsletter next week. I will obviously be available to work with all of my clients next week, right? But no newsletter, right, being published next week. Last video newsletter of the year of 2020. We'll come back early January. I think it's Monday, January 4th. We'll come back to our kind of normally scheduled program after the holiday season. So wrapping things up here on the gold. What's going on in the gold here? We are ultimately bearish into a trading range right now. Right, bearish into a range. We had that three-legged move down that we saw yesterday. I kind of mentioned this yesterday. Usually when you get three big legs, you're going to be seeing some sort of range the following day. That is ultimately what we got today. It was, as you can see, a pretty wild ride on the gold, but it's pretty much three legs down here, right, into a trading range. Now, the gold finds itself in a kind of a tricky spot here right now. We're definitely not a bull market right now, but as you can see though, we've got two very bullish clues on this chart right now. One of them is that very strong run higher. I mean, you can easily see that momentum coming off that low and whipping higher. It gets the pendulum swing taken out. The amount of the move below that range is the amount of the move above the range, right? So we definitely do see that pendulum swing, and we can see that momentum turning, right? So that's one big clue. And then remember, anytime we see a strong move in one direction, right? Anytime we see a strong move in one direction, we expect a retest of that level. At the same time, you can see that trend line coming up. It's difficult to argue with that darn trend line, right? I mean, even a rookie can draw that trend line, so it's very difficult to argue with that trend line. What that means, obviously, is if we go higher here, I have a big problem, right? I have a big problem right now. I have a support trend line on my way. And let's just put a cherry on top. This could also be seen as a big example of those nested failures, right? You got bears trying once, bears trying. I mean, isn't this exactly the pattern we just talked about on the oil, right, and on the S&P? So you can easily see, right? It's just on a bigger scale here. You know what I mean? So we definitely have a lot of reasons right now to want to be a buyer. My biggest problem is we don't have a lot of momentum right now to be a buyer. We're clearly bearish overall, but difficult to get short, right? Difficult to get short. If the market runs lower, I don't want to sell into low. If the market runs higher, I don't have many options. The only way I could really justify getting short on this would be if we take out these highs and then we see basically a two-try nested trap, because I don't want to sell into that trend line. So I have to first worry about absorbing the buyers, which means I got to wait for them to try once and try twice. But then my problem is, once I take care of the buyers, now my problem is the darn trend line. So the only option there would be a trap entry, because trap entries are the best entries to avoid selling into support. So that would be the only setup that I could look for here to get short as the market goes higher. Right? What would be a whole lot easier would be if we get a nice strong green candle, right? Nice strong run higher here. Maybe a two-try breakout pattern, right? A little trap below that low. That'd be a great chance to get long going higher here, right? Or a 1, 2, 3 reversal, 1, 2, 3 breakout, mark the high, mark the low, right? Buy off that low. That would be, right? That will be a very easy setup, right? Getting long as we go. And where do we think these buyers want to get to? Yeah, they want to get back up to where they came from, right? They want to go back to those highs up there, 1870, 1875, right? The big top there, 1879, right? 0.9. So again, a very bear market. Well, not a very bear market, but a bear market right now. But they're making it pretty difficult for us here to try to get short on this. Another option would be if we can break down. Now, again, the problem is I've got no options down here to sell it as it goes lower, right? As it goes lower here, I mean, heck, we're 3 legs down right now. I'd rather be a buyer down here. And how would I buy this? How would I buy off the low of a bear range like this? I'd have to use that nested, right? Let them try once, let them try twice, either the trend line or the stop losses. And again, we'll talk more details on this tomorrow morning once we see it, right? But you're simply buying into those stop losses, right? Or buying off that support trend line, just like those buyers are trying to do right now. So that wouldn't be a bad long side trade off of that low, especially if it was to go like this and take out those lows and then pull back and kind of stall out right above that high like that. Right? When you see that stuff happen and they kind of hold that, right? So we run lower, they come out, right? They hold. Yeah, those are the traps that we dream of right there. Kind of think about it that way, right? They hold that low, they break through it, they come back, they hold it. We get a 1 try, 2 try, trap low on it. Beautiful reversal off of that low. So remember, we're bearish though, so let them try once, let them try twice, and then we'll try to make that run, right, going back up into that trading range. And then this could really get interesting because you can measure the amount below, the amount above, right? And you've got a pretty, that's how you would look for those big runner targets as we go. Or they have to hold that pullback. Right? They got to get that strong move down. They have to hold that pullback and jump off that moving average. Now, I'm more than happy to be a seller if they can give me that 1, 2, 3 breakdown. I'll mark up that low, mark up that high. And then remember, the first test is the best test with those failure into pullback combination setups, right, off of that high. And it isn't always a failure into pullback combination. Sometimes the 2 try trap, sometimes a straight pullback if the channel is steep enough. So there are definitely some different options as far as entry setups off the high of that channel. We'll have to wait to see exactly what the channel looks like, how steep it is, right, or how wide it is tomorrow, right, if we do get it as we go lower. Where do we think those buyers or those bears are trying to go? There's 810, obviously right there. That's a level, but look at this gold chart. Right? So, 810 is obviously an easy area. It also kind of lines up with that prior range back here, right? This, of course, being the 221 contract, which is why it looks so weird like this. And then, of course, if it really hits a bloodbath tomorrow, right, we may see it come back to that 1780. Seems a little bit too much, though, for that 1778 tomorrow here. Does seem very reasonable, though, to get back into that 1810 area if these bears can get this thing going here to the downside. But again, I'll tell you right now, bear market, I'd rather be a buyer on this unless we can get either that 2 try trap, right, above that high, which will take a lot of patience, right, to make sure we absorb the buyers, then get the trap, or it's going to be that 1, 2, 3 going lower, right, to sell from there. Because if we don't, it's going to be a nested off the low to buy back up, or it'll be a 1, 2, 3 run going higher here, or a strong move up, shallow pullback, higher high, and that trap. Now, guys, don't forget, I cover all of these pattern variations, right, in that free trading course I mentioned earlier. So I realize I'm covering a lot on this video tonight. So grab the free course. That way, the next time we work together, right, or when you go back and watch some of my older newsletter videos over the holiday break, right, you'll be able to tell exactly what I'm talking about when I say all these patterns. And again, don't forget, right, tomorrow morning, 8 o'clock Eastern time, I want to see you there right there with me. We're wrapping up the week, right, ahead of the holidays here, next week here, tomorrow morning, 8 o'clock Eastern time in our trade room, our advanced members. I'll see you guys there tomorrow morning, and we'll do this all together. Don't be afraid to call the office if you have any questions, right? That toll-free phone number is always an easy way to reach us here in the corporate headquarters here in Los Angeles. And of course, don't forget, get live chat on the left, live chat on the right, and you can always drop those questions in the comment section below. And I hope by now I've earned a subscribe, right? Hope you subscribe to the channel. Hope you hit that thumbs up button. And I hope you'll share this video with some other trading friends of yours, because there's plenty of information, plenty of knowledge, right? And plenty of ticks to go around out there. Guys and gals, have a fantastic rest of your day out there. Hope you learned a lot. Hope I'll see you tomorrow in the trade room. And again, a very happy holidays, a Merry Christmas, a Happy Hanukkah, whatever you're celebrating this time of the year. Very Happy New Year. I'll be back on our nightly newsletter in January. Obviously, clients, I will see you guys tomorrow in the trade room at 8 o'clock Eastern time, and I hope I'll see you there, right there along with me. That's it for now, guys. As always, be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.